So let's go through the market stats year to date for December 2025 versus year to date in December 2024. We're going to compare where we sit to last year, give a broader picture of the market rather than a month-to-month stat versus that previous year last year, which most real estate stats are based on, especially with the package that our board puts out. So this gives us a broader picture, takes the data over the year to date to let you know where things are sitting, give you a good picture of what the market's doing right now. So jumping into it, I'm going to look at big picture. So all of the sales in the market, so all of the categories, detached, land only, as well as break them down individually and talk about where the sales were happening in each of the areas on the Sunshine Coast. There's some big changes that happened in the market this year that I'll talk about at the end. So the biggest surprises that I found at least. And yeah, so let's dive into overall big picture. So sales, we saw a slight decrease this year. So we're down about 2.5%. Last year, we're at 589 total sales this time. And right now we are at 574 sales for 2025. So pretty expected, a little bit of a dip. But pretty much on par with 2024, and having my finger on the pulse right now, seeing the late stage of the year activity that we've seen the last week and a half, I think we'll catch up that 2.5%. We're probably going to end the year pretty much on par. So yeah, not a big change there. Same with median sales price, we're still sitting around 840,000, just under. Housing price index is actually seeing a bit of a drop. So the housing price index takes a wider range of data, of median sales data for a typical home here on the Sunshine Coast. And it removes the outliers. So you don't have the big swings like averages do. Gives you a bit of a broader picture of what typical pricing should be for a typical home on the Sunshine Coast. And the housing price index has actually dropped about 4.5% over last year. So slight drop in pricing overall. So not a crazy swing, but it's still showing that the market is trending down price-wise. So days on market, so taking the average time or the median amount of time to sell your home on the Sunshine Coast. So if we take average, we're looking at 60 to 70 days to sell a house or property here on the Sunshine Coast in all categories. If you actually look at the median data, that's much lower. So median data takes the middle of the market, and for days on market, on the median end, so in the middle, you're looking at 45 days on market, which is much lower than the average. So that means to me, that middle of the market and those well-priced homes are still selling within a shorter period of time than the rest that are on the market. So it's showing that pricing and presentation is definitely key on selling in this market. But yeah, pricing sharply, you're gonna be on the market drastically less amount of days than you would be if you're trying for a bit higher of a price. So moving on to detached homes only. So this time last year, we're at 430 sales. This year, we're at 446 sales. So we saw a bit of a bump in the detached market. So yeah, detached homes selling a bit more. And I think, again, that's a bit of price correction, but it's also people with the price correction in detached homes, people that were maybe buying into attached properties, townhomes, condos last year. That price gap has gotten considerably closer for detached. So I think we're seeing some of those buyers being able to stretch that a little bit more and get into detached homes. So median pricing on detached, relatively unchanged, about 2.5% down from last year. And days on market down considerably by about 10 days on market. So it's not, I mean, maybe not considerably, but still seeing a bump and trending a bit quicker to sell your home. But that's, again, based on prices softening a little bit in the detached market. So bigger changes coming when you hit the attached market. So this time last year, 107 sales. year to date, and this year we're sitting at 97, so it's about a 9% drop. So getting into more considerable numbers. Still not a huge amount of volume, about 10 to 12 sales a month. 8 to 10 sales a month. And the median attached price on attached homes has actually dropped about 6 to 7%, and the days on market has increased by 86%. So that's showing that there's probably still a bit of a correction to happen in the attached market for condos and townhomes. Condos especially, I'm seeing asking prices stay relatively high compared to what you could get a detached home for. And therefore, there's a lot of people opting to go the detached route, and sellers need to adjust their expectations in condos and townhomes right now to get those a bit lower, to make those the more affordable option by far. And I think we'll see a swing back to people going into the attached market. But right now, cost of borrowing plus higher strata fees on average lately, just making it not as affordable of an option and making that gap into detached much closer, which again, I think we're seeing a lot of buyers opt for that instead. So big change. Land only, not a surprise here. The cost of construction, DCCs, utility connections, prices of everything are going up. So to buy a piece of land and build a house, you're going to get into a detached home for much cheaper by going out and buying something pre-existing rather than buying a piece of land and building what you want. Builders, the profit margins have really gone away with those high costs and the softening of the market. So land sales are actually down 40% for those reasons, and probably a bit more. Land prices have actually increased by about 9%, but that's taking the median sales. So of the land that is sold, that price has gone up a bit, but that's probably just because there's been some more attractive, higher price point options in land that people are going for. But again, sales down 40%, so not a lot of land actually selling, only 31 sales this year versus 52 last year. So again, days on market because of that have jumped 44% if you're trying to sell a piece of property. So seeing a lot of pieces of property out there that have been on the market for 1, 2, possibly even longer amount of time or amount of years. So the interesting part of the market that I like to look at, especially when you're looking at year-to-date data, is the price bands. So these are price increments, $250,000, $500,000. So that's showing where the sales are happening within the market at a given price point. So we're seeing a big shift, especially when you're looking at, and the biggest shift, is when you're looking at homes that were selling, or the amount of sales that were above 2 million, in between 2 and 2.5 million last year. That has seen the biggest drop in the amount of sales, and the biggest increase in sales is actually properties 1.5 to $2 million percentage-wise within the market. So we've seen about a 60% gap in the drop of the $2 to $2.5 million range properties into the $1.5 to $2 million range. So that, to me, showing that softening of the market. So the middle upper end type properties, there's been a big adjustment there. A lot of those properties that were priced 2 million and above are now priced below that, and people are jumping in and buying those. So seeing a big shift there. As always, the biggest amount of sales in the market for price band is around the median range, so $850,000 to $1 million. Not a surprise. In any market, that should be the highest amount of sales. But we're definitely, again, when you're looking even $1 million to $1.5 million and breaking that down to $1,250,000 to 1.5, you're seeing a big shift from those homes that were above $1,250,000. Now we're seeing those prices or those sales happening more in the $1 to $1,250,000 range. So A lot of price band shifting happening again with market prices going down. The amount of sales that are happening in the lower price bands are increasing. Yeah, so let's get into neighborhoods. So Gibsons and Sechelt, really not seeing a huge change, but Sechelt's seen about a 6% decline in the amount of sales, and Gibsons has seen about a 4% decline. So relative to the market and the overall amount of sales, that's not a surprise. The biggest surprise, or the biggest jumps that we've seen, is in Roberts Creek and Half Moon Bay, which are up 26% and 30% in the amount of sales that happen in those areas respectively. So that's a pretty big jump. People opting for more rural feeling properties, and also those are pretty desirable areas. We're seeing a bit more inventory in both of those areas than we usually would. So again, people having more opportunities to jump in there to maybe versus other years where maybe they were competing for properties in there, and less inventory. So Pender Harbor and Egmont saw an actual pretty big substantial drop in the amount of sales up there. So down 20% year over year. Only 59 sales happen in the whole of Pender Harbor and Egmont this year. So what does this mean for buyers and sellers? So market-wise, year over year versus 2024, we haven't seen a huge change in the amount of sales, so things are kind of relatively flat. The market isn't dead, but it's not crazy. We were seeing some competing offers in the market, but it wasn't going completely crazy. It wasn't driving prices up. It was just the right product came out for the right buyers that were out there. There were multiple buyers looking for the same property. Obviously creates competing offers, but nobody got overzealous. We weren't seeing, even $10,000, $20,000 over asking. We were maybe seeing at asking maybe a couple $1,000s more just to make sure that buyer was going to get that property. And in some cases, definitely seeing those competing offers come in under asking price. So buyers, lots of options out there still. You have some time if you need to sell before you purchase. There's time for that to happen now in the market. So we're seeing a lot of people selling, relocating within the community because they have that time. There is generally negotiation room in any deal. So again, we're seeing things sell for under asking. Our average right now is about 95.6% sales price to listing price. So there's definitely a gap. Negotiation room. Don't be afraid to make offers right now. There's a lot of sellers sitting out there wanting to sell that are maybe a little bit more negotiable than they'll let on, and been sitting on the market for a while and would just welcome an offer. So it doesn't hurt to try in this market. Sellers, again, adjusting those expectations as always. Your home is probably not going to be worth what something in your neighborhood sold for last year, especially not 2 years ago. So you need to price it correctly. You need to price it competitively against your competition. So you want that to stand out price point wise as a good deal, because buyers are out there looking for good deals right now. Mortgage rates aren't really helping out. Have come down over the last couple of years, but they've seemingly bottomed out, if not are going to start to go up on the fixed rate side of things. So yeah, that's the market picture for this year. If you have any questions, don't hesitate to reach out. I'm happy to break down the market even further for you. If you have any questions, my email is cody@codyrobinson.ca.